Hey everyone, so today's video is going to be about diversification. Now we all know that we should have eggs in different baskets, but there's a few things I've been noticing, and a question I often get is, how do I get diversified? How do I get those eggs in different baskets? So that's what we're going to talk about today. So many of you may be familiar with this chart, but it's what's called a style box. So every stock out there could be put somewhere on this grid. And we've got large companies, medium-sized companies, and small companies. And then we can break that out further, and we can talk about growth stocks versus value stocks. So a growth stock is going to return value to you as a shareholder. Their main goal is to grow their stock price as much as they can. They don't pay a dividend. This is going to be something along the lines of Amazon or Facebook, compared to a value company like DTE or ExxonMobil or Ford. They want to grow their stock price, but they're also going to pay you in the interim via quarterly dividends. Now, which one's better than the other? And the answer is, it depends from year to year. And then there's some companies that would be a blend, or a little bit of both. They're primarily focused on growing their stock price, but maybe they also pay a small dividend, maybe like an Apple. So, every time I draw this grid, it always makes me think of one of those old farmhouse doors where you've got the different window panes. And what I've noticed is, a lot of folks have gravitated more to the names that they're familiar with, the services they use every day: Netflix, Snapchat, Facebook, Amazon, Google. And they've been rewarded for that. They've been outperformers compared to the broad market for the last few years. But what I've noticed is, if the majority of your portfolio is allocated in this part of the market, and a rock goes through this window, but that's your entire window pane, it's going to be pretty traumatic and pretty time intensive. Might have to buy an entirely new door rather than just being able to say, well, I'm still okay, even though this part of the market was blown up and a rock went through this part of the window. It's going to be a lot less traumatic just to swap out that one window pane in for something else. So the name of the game really is, we want to have eggs in all these different baskets, a well-diversified portfolio. Now from there, you hear a lot of people talk, on the news about the S&P 500. So that would be this part of the market. There's some medium-sized companies in there, but for the most part, it's the biggest 500 companies.